Hello and welcome back everyone to Bull's Corner, your daily destination for all things related to financial markets. I'm your host Big Bull and I'm here to guide you through the stock market and my carefully curated watch list for the next trading days. If you're ready to ride the waves with me and make some smart investment decisions, then make sure to hit that subscribe button and ring that notification bell so you never miss out on the daily stock market updates. As you all know by now, each day we'll break down the latest market trends, analyze ETFs performance, and reveal the topics on our watch list that could help you maximize your gains and minimize your risk. Alright, folks, let's get started with today's stock market update. So first thing first, guys, we need to look at some of the key economic data that is coming out next week. As you can see in my screen, we are getting the data almost every single day, so we can expect a major swings in the market for the next week, and we are here for it. Now let's take a look at some of the key status that I'm looking into next week. So guys, before looking at some of the daily charts, I want you to look at some of the quarterly charts that I charted for you guys and some of the weekly status. Now, by looking at some of these quarterly charts, we are gonna get some of the idea, where the market is heading in the next couple of months, and then we go into the daily chart and then we'll play by levels. So the first chart I'm going to show you is a SPY ETF. Looking at this 3-month candle here, it does look like a rejection from the supply zone prior, where this a huge move happened to the new 52-week lows where the bear market started. So the levels that I'm looking at for next month or next trading week is if SPY needs to hold this 422.61 level on the monthly time frame. If any month candle closing below this level, that's a huge bearish sign for the markets. And let's say even if I'm playing this as a 50-minute chart, then this would be my first target after the supply rejection, which would be this demand zone. And this demand zone quarterly time frame is almost at prior lows, which is October lows, which would put SPY at around 370 level. But we'll see how that plays out on SPY. The next chart that I'm looking at is IWM, which is a small cap ETF. Also not a good look on the monthly time frame. A huge bear flag is forming and also rejection candle on the quarterly time frame. So the key levels that I'm watching is prior month lows, which is 174.56. We break that. After breaking, I think it's going to head straight to 168, which is also a key level, and there's a small gap to fill there too. Let's look at the daily time frame to see what I'm talking about. And as we all know by now, this is a huge head and shoulder pattern breakdown, followed by successful retest and a new lows, and then weekly structure change, the monthly structure change. So there are very high chances the rip's gonna get sold unless we break this prior highs, which is around 186. So any pumps below that, high chances we're gonna get sold back down to new lows here. Next up, we have ARC Innovations. It's a daddy ETF. I don't think it's gonna go back to all-time highs. Just looking at this monthly time frame, which is also forming a huge bear flag. Sideways consolidation for almost more than a year now. And the key levels, again, watching this prior month's lows. We break it, I think it's gonna head straight back to 28, 29 level. The only demand that I see in this area, which is around 20, 22 level. This is where I expect price to go to in a couple of months and then bounce from here. And then next up, I'm looking at some of the regional banks, and then the key levels that I'm looking at on it is 40.51 support break with a target of 39.34, and the second target is 38.43 on this one. Again, if we do break the upside on this range, and the high of the range is 42.36, we break it, and then I would play the small upside on this one around 43, and then 43.62, which is another supply zone where I will go short on this one. And this is one of the weakest sectors out there right now, where every single pump is getting sold, and then most of the bank names are at 52-week lows. We will look into some of those names too. But look at the regional banks, it's down 28% on the year, when SPY is up 7%. But if you do take out those top 7 from the SPY is only up to 2 to 3%. SPY and Q's only semis. So these are only 3 or 4 sectors that are doing well compared to rest of the sectors out there. And then just so you know, guys, this is the weakest bull market we are having in over 60 years. So definitely, don't want to be a bull, in this environment where interest rates are 20, 25-year highs. inflation was at 40-year highs, and oil is starting to go back to $100, right? So definitely not a good environment for the bulls to put their money in a risky environment when they can put in money in a safe box at 5 to 6% CDs, where it is definitely risk-free money compared to putting the stock market. So you need to think like an investor, if you are even if you are day trading to just to have an overall outlook for the market, what can happen in the next couple of months or weeks. So let's look at semis. Semis ETF, looking at the weekly, because this is what we expected, because we were expecting a bounce of SPY, and then many were trying to short this prior support, which is a 140 and then price did break above it as expected, and so this is a SPY that I was expecting to price reject on, and then the price did reject of the SPY zone on Friday. And closed nearly at the lows here. So the key levels, again, I'm watching this same level, which is 143.40 level. We break this level again, I think there are high chances we see these new lows. So SAM is the key name I'm watching next week. If this support holds, that means price can bounce off this level back to this volume node around 149.50. So definitely watching for a fake out retest or a bull trap. So definitely one of the key name to watch. SPX, it's just going with the SPY and then following up projection to the T, rejecting of this supply zone, forming bear flag. I do expect a new lows on this one too. Instead of focusing on VIX right now, I'm focusing on SWIX to see the movement of the ETFs if I'm trading options on it. Now let's take a look at Dow Jones quarterly chart. Looking at quarterly, looking like again of another fake out of this prior resistance, price trying so hard to close above this multi-month resistance, but failed again and closed below this level. So what I'm watching going forward is that even if we do get a bounce, then I'm watching this resistance of 345 again for a rejection of probably a fake out retest, and then head back down. If we don't get a bounce to the 345 resistance, then I'm watching this lows here for the prior month, which is 326. We break that, and that is only demand that I see on the 3-month time frame, which is around starting at 307, also which is almost July and October lows for the last year. Looking at Nasdaq 3-month time frame, also formed a rejection candle of the supply zone. So the key levels I'm watching on this is the again prior month's lows 351.36 level. Looking at the daily time frame, we have this ABCs definitely coming, and we have this 1 2 3 4 5 to the downside. So definitely expecting one more low on Qs. The key levels I'm watching on Qs is this prior supply zone. So even if we do get a bounce of this supply zone and this something like this ABC, then definitely this is my next short spot of interest. But I think there are low chances for a bounce, but I think we're gonna see a new lows, and then we can bounce, then we can see a big bounce followed by another lows, and that I'll explain in my SPY analysis. XLF, everyone is looking at XLF names. As I told you guys already, they are looking weak. They are looking very weak. And looking at the daily time frame, bear flag breakdown, heading back to this June lows. And then looking at the 3-month time frame, shooting star, guys, shooting star on the 3-month time frame. Definitely not a good look for the banks. And then I already tried to warn everyone before the bear flag breakdown that we can see a breakdown of this level, and we have 2 weekly gaps to fill below. If you look at the weekly right here, we have this massive this gap to fill and this gap to fill around here. Now let's look at some of the key banking names out there. Just the first one is Morgan Stanley. Looking at the weekly time frame on the Morgan Stanley is definitely not a good look. Uptrend breakdown on huge volume, head and shoulder too. So as long as price is staying below this massive resistance, which is around 83, I do expect new lows on Morgan Stanley. Looking at Citigroup here, and the Citigroup is also not a good look on the 3-month time frame. Even on the weeklies, price is holding this October lows back, and then in this huge uptrend breakdown followed by sideways action. Does look like a bear flag too on the weekly time frame. So again, banks are my top watch for the next week to go short on it if we do break Friday lows on all of these names. Now let's come back to SPY and see on the daily time frame to see what I'm seeing on SPY. Or let's take a look at the hourly and what I'm seeing in terms of the waves, and in the next supply and demand too. So as you all know, we did nail the top on Friday, and then I sent a warning for this one too. Just a day before. Where's my tweet? Right here. So I was like, I said there's a 5-minute bull flagging, expecting one more high into the supply before the reversal, and that was a supply zone I was watching. And then that's a bull flag was right there on 5 minutes. Now let's look into 10 minutes to see that's a bull flag was forming. We gapped up into the supply zone, and then I did go short with my team right into the supply zone for the next week puts, and then it did print 200% at the lows, and then we were out most of it by end of the day. And then now we are holding only some of the shorts in the energy names and some of the banks for the next weeks. But now let's look at the waves for the SPY. Let's look at 30-minute time frame first to see what I'm expecting on SPY. Is, as you can see clearly, price is in the wave 3, and I do expect for wave 5 to come next, something like this: wave 1, 2, and then we have this wave 3, 4, and 5. I'll change it mini. I think price is in the wave 5 of wave 3, and the new lows for wave 3 around this prior demand zone, which is around 418 420 level. So this is where I expect a bounce on SPY for a wave 3 for wave 4. We can see a nice bounce for wave 4, kind of a tradable bounce for wave 4 in a zigzag ABC, something like this, and then followed by another lows for wave 5. And then this is where I think we can see a nice bounce up back to this around 440 445 area. So this is the level where that will decide if market wants to go higher, or if wants to go back to the new lows. So definitely gonna be interesting to see what price does around this zone in the next month or so. So that's what I'm watching for SPY going forward. Again, guys, I'm just going to put out one more scenario for SPY. So let's just say even if we are done with wave 3 right here, then, and if we do get another highs next week, early next week, then ABC, something like this, then I would still be looking to go short into this supply zone or this prior support break on the retest on this wave high around 434 436, targeting new lows for wave 5. And then again, same this scenario going forward. So guys, so these are the key ETFs that I am looking at. This is what I think can happen going forward. So now let's move forward to some of the stock picks that I picked for the next week. The first thing that I'm watching going to next week is Apple. Looking at Apple, definitely looks like a prior breakdown retest here, and price rejected. So the key levels I'm watching, let's look at 4-hour time frame, which is this Friday lows here around 170.31. If price breaks this level, I do expect price to print new lows on this one with the first target of 161.61, followed by this massive gap fill targeting around 165. So if price do break this Friday highs, which would be a bear trap, and then I'll be looking to go long above 173, targeting this small gap fill around 176, 177. Low chances, but can happen. You just cannot predict the intraday movements, so you need to go with your levels. So these are some of the levels I'm watching on Apple. AMD, many are turning bullish on AMD, and they are looking this massive weekly bull flag on this one. But you also need to consider the fact that price tagged the weekly or supply zone here, and then also break down this huge uptrend starting back in January this year, and then it can also be a retest, and a massive volume node breakdown retest also in play. So again, as long as price stays below 111 or 112 level, there is no reason for to be bullish on AMD. I think sell the pops is still in play on AMD. My aggressive target is 84, and 80 is still in play as long as price stays below this one. So the waves that I'm watching on this one is something like, we have this wave 1, wave 2, and then wave 3, and then wave 4, another, followed by another wave 5 down. So let's see how that plays out. Looking at the daily time frame on this one, is we did get a rejection, bearish engulfing of the supply zone. Again, looking at some of the 2 days supply, I think it's not in a supply yet. Looks like it did tag a supply zone. Even though we do get one more high, I think we can get another sniper entry on the shorts with the tight stops at 109, targeting new lows with the first target at 96.41 and 94.55, followed by 86. So let's see how that plays out. On Johnson & Johnson's, you guys know it, gave you guys the top already on this one, last month, saying look at the volume on the 3 months time frame, and then you will know what I'm talking about is what is coming to next on Johnson & Johnson. Look at volume, massive volume rejection. In this history, we never seen a this high volume coming out, and then this volume came right at the top, not in the bottom. Just more than half, I would say 60 to 70% of the volume of this candle came at the top. So that was definitely probably a multi-month or multi-year top for Johnson & Johnson's. And what I'm watching on this one is printed weekly bearish engulfing and shooting star on a quarterly time frame. This the head and shoulder breakdown, uptrend breakdown. The price stays below this 157, and if we would get a retest of these zones here, and then I would like to take another shot on this one, targeting new 52-week lows around this 150 level, or even potentially lower, going back to this 142 level too on Johnson & Johnson's. Look at the daily. Even if you don't get a bounce, price consolidating sideways for 3 days, and I'm watching it 150 530 break. We break it, and then I think easy 154, 153 is the next target on intraday on Johnson & Johnson's. MRK, another healthcare name, not looking good. Huge triangle breakdown, looks like a head and shoulders too. And then on some volume, looking at the 3 months, bearish engulfing on a quarterly time frame, not a good look. And just want to let you know, guys, I also got a huge sell signal on this one on the quarterly time frame, which means there are very high chances this name can go back to this demand zone around 90, which is almost a 10 to 15 points drop from current levels, which is. So this next one here, we have Rivian, as every single one out there is expecting a huge pop in Rivian going forward. They are bullish just because it's printed this weekly bullish engulfing, but I think it is just, they are just setting a trap into the weekly supply zone, and then they're gonna push it back to this demand zone around 15. So again, if we do get a push into this supply zone next week, then I will start building a short position targeting this lows or even prior lows in the next couple months, with the tight stops at 28 level. So I think a good reward for buyers around this level for Rivian. Amazon, we printed this weekly shooting star, and then broke this weekly range, followed by a retest on some high volume. Looking at 3 month time frame, another shooting star on the quarterly time frame, also look like a break and retest of this prior support, and then of this golden ratio too. So the key levels, I am watching this prior month's lows, which is 123, and also a cycle level. We break that, I think price is going to head back to this demand zone, which is starting at 103, 104. So a huge downside can come to Amazon too if we fail to hold this lows around 124. Also looks like a daily supply rejection too on this one. So again, all of this pointing to at least one more low in price, followed by a bounce, followed by another lows And then as you can see the SPY analysis that I did before, you can just put all those waves on all these key names out there like Amazon, Apple, Tesla, Nvidia. They all look the same. I know, guys, today's analysis, taking a little bit of much time, but because we closed the month and then we close the quarterly and then we close the weekly time frame. So I just wanted to you guys, to stay updated with the market and see what's happening. For those who cannot look at 200 charts out there, and BA, looking at BA, guys, this is, I would say, one of the most bearish charts out there. I will try to sell the pops on this one, because looking at the weekly time frame, we have this waterfall sell-off on weekly time frame, back-to-back red candles. Even if we look back into the sell-off that started in January or March, when the bear market actually started, even then we didn't get this aggressive sell-off on BA, and now we're getting it. So definitely not a good look. We broke monthly structure and we broke weekly structure too. So again, this sell-off gonna have consequences for the bulls. So any single bounce, I do expect to sell back down. Let's say price even goes to the sideways section for a couple of weeks from here, I think another bear flag followed by another massive dump is coming to be it. Just because looking at the 3-month time frame, shooting star, or we would say any reversal candle on the 3-month time frame closed below this prior two quarterly candles. The next demand is, I see, around 136 on BA. Again, guys, the only reason I'm pointing out these supply and demand zones, because if I'm playing hourly time frame, and so that's how I would mark my demands. That would be my targets for intraday targets, or for my swing targets. Now I'm just looking at the bigger time frame and then marking those same supply and demand zones on these time frames. It's definitely going to take time to play out, but we just have to be patient, and then but focus on intraday time frame movements, instead of just buying out 6 or 8 months out puts. But I'm going to focus on these small bounces to short it. These names, that all I'm showing to you. Coin, this is what I want to talk about. Some of the crypto names printed massive shooting stars on their 3-month candles. A coin is a good example. I'm not going to give you levels for this one, because this thing is just doesn't make sense, because every single pop I think is going to get sold. And then MSTR is another one, MicroStrategy, even bearish looking candle on it on the 3-month time frame, bearish shooting star. Again, the next demand is around 210, 211. So I think it's going to test these levels too. And then looking at Mora too, and looking at Mora, another bearish candle on Mora here. Let's look at the weekly time frame to see what's really going on. And our Genius ad long at 14, and it's probably down 70%. So these are some of the people that you need to look at just to do the opposite, so you stay ahead of 90% of the people out there. The breakdown of prior support, breakdown retest happening, definitely not a good look for the next couple of months. HD, looking at 3-month time frame on this one, another shooting star, guy. Another shooting star. Price is just consolidating in this massive yearly range here. Also looking like a bear flag too. But again, I do not trade HD. It moves really slow on the daily time, really choppy. But good to chart it and see where the probably market is heading, where that Dow names might be heading for the next couple of days or weeks or months. MasterCard, guys, I'll show you MasterCard. I will show you Visa, and we do it. Price did make a new highs in this quarter, but failed to close above. And then again, it looks like a reversal candle on some low volume too. So even if as long as prices stay below this 400 strike level, and then we get a retest of this level, I'll be closely watching to see how MasterCard does it and Visa does it. And then I'll play the shots accordingly on these names, because if these names are, because these are consumer spending names, these names are weak, that means we're having a weak economy, people are not spending much money. So definitely watching these names going forward. Also, guys, I'll add American Express to the list. On this one is looking at 3 month on American Express. Huge bearish engulfing candle on this one. Also formed a supply zone too. So I think any bounces to the supply zone, high chance you're gonna get sold back down to this demand zone here around 138, 140 level. And then now let's take a look at the Visa. Visa is absolutely looking worse than the Mastercard. Mastercard did make new highs, but it looks like Visa made a double top, and then after making a double top, price failed to close above this prior resistance. Tried a couple times, rejected, and then tried closing this quarter two, but failed to close above, and then formed a reversal candle on it. And then again, same looking demand zone two on this one, around 197 200 level. So again, watching this 240 level. If we do get a retest of this level, I will try to play multi-month short swing on this one with the stops at 250, only 10-point shorts with the reward of almost 40-point short on this one. So definitely on a high watch list. Netflix, 3-month Netflix chart also definitely not looking good. Looks like a bear flag too on the 3-month time frame. Very clean looking bear flag, rejection of the golden zone, and this prior support break and retest too. So the key levels that I'm watching on the daily time frame is daily just in a sideways consolidation. So I'm watching this prior week closed around 371, and for the upside I'm watching 385. So these are the zone I'm watching to play on Netflix. And Netflix also have this a small gap to fill, and that's the only demand I see to around 340. If we do break 371, I do expect this gap to fill. And as you can see on the chart, this massive uptrend is also broken on Netflix. Now let's look at Apple. And we already looked at Apple, guys. So let's look at Tesla in the end to see how Tesla's doing. Tesla's bouncing off this uptrend here, but also looks like a rejection from this prior supply zone 2 on Friday. Again, same wave startup as SPY 1, 2, 3, 4, 5 in play. As long as Friday's highs are protected, I think new lows can come on Tesla too. Watching 243, 33 level breakdown on this one with the targets of 231.50 for the shorts. And then if we do break the highs, because it's a doji candle, we do break the highs, and then I'm watching 254.60. If a high breaks on this, then my target would be this small gap fill. Also this daily range breakdown retest also be in play, and then that's also looking like another supply zone is formed here. So if we do get a bounce, that's my next short spot of interest for Tesla. Alright guys, so that's the wrap for the stock market update here on Bull's Corner. I hope you found the information valuable and insightful. If you enjoyed this video and want to stay ahead of the curve in the stock market, do not forget to give the thumbs up, share with your fellow traders, and subscribe to Bull's Corner for daily stock market updates.